Let's get this party started, ladies and gents. Excuse me. I love this book. Let's see if I show you the right way. Reminiscence of a Stock Operator. I know most of you got this already. It's just so good to look through. I logged on before, and I was just getting the slides set up, and I'm looking at the markets, slicking around. I'm just thumbing through this, and there's so many little gems in it. You know, where he trades his cotton line, and he closes his biggest winning trade and holds his loser. If you haven't read it, definitely read it. Most of you have, I know. But Reminiscences of a Stock Operator. This is my kind of well-worn copy. They actually do a hardback copy, which kind of explains a little bit about what was going on back then, because it was 1930, I want to say 32, something like that. Originally published 1923. So anyway, that sort of era, and there's a lot of kind of context and was a lot of terminology and stuff that you don't know. Like, you know, none of us are trading back then. I don't think any of us were anyway. And it's just good because it shows you on the other side of the page, hey, this is what it's all about. This is what it meant by cornering the market. This is what it meant by this, and just explains stuff. So there's a hardback version. I recommend that as well, because it kind of adds some color to what trading was like at the time. And if you're a market nerd like me, then you know, you just enjoy reading about some of the things that the great traders before us were doing as we kind of try and fill their shoes. Okay, so let me let a few people come in first. What time I'm looking over my other screens, by the way. I'm not kind of looking around the room. I'm looking at my other screens. Big old day today. As we are doing this, if you're watching the recording, it's the 14th, and we have 2% up on NASDAQ and 1.5 on Dow. We've got almost 2 on the S&P. We've got 4 and a bit on Russell. Dollars shifting around. Yeah, wild day. Data came out, and apparently the inflation problem has gone away. So we shall see if this continues. It's definitely been just squeezing the shorts recently, the equity market. That's for sure. This is maybe the final hurrah, or maybe we kind of just chug into gear and we kind of push through and have the Santa rally. Who knows? I don't really mind as long as we're moving. If we're moving day to day, that's fine by me. If the rug gets pulled, fine by me. Carry on running, fine by me. Just anything but stagnation. We don't want stagnation. Let's wait for a few more people. Let's start about 30 seconds. I went to a garden centre this weekend. I'll tell you this story. And if you don't know what a garden centre is, UK, you know what a garden centre is. But they do sell plants, they do sell bits for gardens, but they've become more like villages now, where you can get toys, but now you can get Christmas stuff. So if you venture into a garden centre in mid-November, be prepared to be bombarded with Christmas stuff. So if you are not ready for it, do not go into a garden center just yet, because you'll be inundated. And there's so many people who are in there looking at baubles and tinsel and all this type of stuff. But better to be prepared than be unprepared. Like, you don't want to be, for the gentleman, you don't want to be on Christmas Eve going into the department store with a little panic on your face, Christmas Eve, and the clerk sees you and she's like, I know that face, comes over, sir, why are you here? Oh, it's Christmas Eve, I need to get something for my wife, my girlfriend. Oh, sir, well, are you, how can we help you? I think we can help you because, of course, you're very, very time sensitive, but you're not very price sensitive. So just like a market order, you're like, I need this order done. I don't care what price. You're a little bit at the mercy of whatever is offered at the time. Let me show you these fine jewels. Let me show you these very, very finest products in the store. So just like a market order, when you're like, hey, I don't care about time, I just want to get in. Don't leave it till Christmas Eve. Anyway, we're going off a tangent. Let's get rolling. Let's get started. Okay, Scalper's Edge. Everyone is in. Good to see you, ladies and gentlemen. I'll introduce myself in a moment, but I first want to give you a risk warning. Of course, you've seen these everywhere. I hope you have. If you haven't, please understand the risk involved when you're trading these leverage instruments like CFDs, like spread bets, whatever you are trading. And that is double-edged sword, right? The leverage gives you opportunity to make a lot of money very quickly, but also on the other side, you can lose a lot of money very quickly. So understand the game that you're playing, understand how everything works. I'm sure most of you do, but I'd like to make sure that's covered before we move on. And also, of course, anything I'm talking about today, it's just me talking. It's just me sharing some things that I think are valuable. Just take it as that. Do your own research, all the other stuff that comes in with that. I don't know how big your account is. I don't know what type of trader you are. I don't know what sort of experience you've got. I don't know that. So I just try and share stuff that I think is valuable. And you grab a few little bits, hopefully take it away and hopefully improve your trading. All right, so today, scalper's edge. Nice quote here from PTGA, Paul Tudor Jones. Don't be a hero. Don't have an ego. Always question yourself and your ability. Don't ever feel that you are very good. The second you do, you are dead. And it's so true. You have a bit of good run, you're feeling good about your trading. All of a sudden, you're like your chest beating, you're thinking of this, thinking of that. Market will give you a big slap. It smells that. It smells that. So just watch out for that one. Okay. Scalper's edge. What are we going to talk about today? So, first introduce myself. I know many of you here know me, but there's also some people who maybe are Pepperstone clients or on Pepperstone's email list who aren't familiar with me. My name is Mark Holstead. I've been trading for 20 plus years. I also run Traders Mastermind, which is a community for traders. But before all that, the best thing that you can do if you want to kind of get involved in this, or get involved in kind of reading some of my content, is sign up for the free daily email. I send it out every morning at 7:30. I write all sorts of things. You know, we're talking about strategy, talk about mindset, discipline, all sorts of stuff. So if you're interested in trading, you're ambitious about your trading, you want to improve your trading, then sign up for that. If you want to find out more about me, I won't waste time today. You can go and check the About Us page on tradersmastermind.com. And you might have seen some of my videos on UK spread betting, which I did help grow. It's quite a big number of views, which is amazing. People wanted to hear what I had to say, which sometimes you think, gosh, you know, I'm a trader just trading away and sharing some knowledge. But I've helped people, which is nice to hear. By the way, if you can hear rain, it's because it's just completely heavens have opened and they're hammering on these skylights, hammering on the outside windows. Hopefully the microphone won't pick it up. But UK, mid-November, what else do you expect? If it's not the rain, it's the leaves. Reminder, I don't have all the answers. You know, I'm not here to say must do this, must do that. Not at all. I'm going to share with you ideas and thoughts I think are going to help you. Always do your analysis, research, homework. These things take time, whatever you do. Implement a change, try it, stick to it, observe the results, make some course corrections. Nothing happens quickly, but if you're committed and you kind of try things, you tweak, adjust, adapt, make some course corrections as you go, and don't give up, then things happen. All of a sudden you look around and you go, actually, I'm a way better trader than I was 6 months ago, 1 year ago, whatever it is. Okay, let's get into the meat of what we're talking about today. Today, we're going to talk about Scalper's Edge, but part one, a two-part webinar series. Next one's in 2 weeks' time, same place. Today, risk management tactics, mindset tips, price clues, momentum strategies. Got 2 decent momentum strategies for you today, the rules of those and how we can kind of potentially go and use them, or not necessarily use them, but maybe do some digging and find out if they're right for you. But I really want to talk about, you know, risk, and they're only a slide each, these things, because I don't want to bore you with stuff which hopefully you know, but it's very, very worth covering. Because scalping can be a little bit precarious sometimes. Scalping is a tough edge to carve out. It can be. I do think there's an edge. Personally, I think there's an edge that lies in short-term price movement prediction. I think predicting the next 1 to 5 minutes can be a big edge for a lot of people. But the downside is that it's really tough on your mind. It's mentally taxing. It does take a lot of time, obviously, there in front of the screen you're watching. It requires such solid discipline, right? Such solid discipline, because one slip up, you know, you give them back all your profits from the last 5 trades. If you just hesitate, the market just rips against you and you hesitate on that button for a second, you know, you've watched the markets, you understand how quick these things can move. You've got to come out quickly. So understand that. Spreads and commissions can add up. Even nowadays when our spreads are super, super tight, it adds up, right? This kind of stuff adds up. Of course, you've got no overnight carry charge, which is great. You go home flat at the end of the day, great, that's nice. But the more you trade, the more you pay to trade. So these stuff can add up. And I think it's, you know, a sweet spot between kind of high frequency trading guys and kind of the bigger kind of moves. So let's talk about scalping. Definition. The market gets to a key level. Okay, this is key, right? I want to get everyone on the same page here. I want us to all be thinking the same way. The misnomer or the misunderstanding we have about scalping, and hold my hands up, this was me probably 15, 16, 17, maybe almost 20 years ago now, for 23 years. I thought scalping was just scalping away all day. And I would kind of make some money in the morning and I give it all back in the evening. Or I dig a big hole for myself in the morning and then make money in the afternoon. And I'd be like, what's going on? And then when I realized and looked at it, it was like, hang on a second. There's no edge when you're trading certain times. You're trading random price movements. When you take a trade, you're saying, I think I know where the next 1 to 5 minutes is going to go for scalp, or maybe 10 seconds to 5 minutes, or whatever you're sort of looking for. Do I really know then? Well, just because the price suddenly moves a little bit, I think I know where it's going? Nonsense. You know, scalping is about, from my perspective and the way I believe it, scalping is about still getting involved in trading multiple times, but normally around a key level or around something where there's edge. So you go, right, this is random. This is where I believe I've got edge. I'm now going to trade multiple times around that area. And so you might be trading a key level. As it fades through, you're scalping the move back. As it pops through, you're scalping the move back. Maybe you're scalping around that key level until it fires off again, and then you left it. You're done. Maybe you're scalping an exhaustion move, and you're done. You're not scalping and trading everything. And that, honestly, that is the biggest problem that scalpers have, is over trading. And of course, scalping defined generally is, and there's also a bit of a mismatch of definitions, I feel, is that we think scalping is very, very active, very, very frequent. You can do 5 scalps a day and still come out really, really well, but just taking small profits. You know, you don't have to be trading 100 times a day. You can do 5, 10, 15, 20. You know, the frequency isn't really definition of scalping. It tends to be more frequency and more trades per day, because by definition you're in and out quicker, so there's opportunities are there. But it doesn't always necessarily mean that you're going to be trading low. So just remember, I think that's just something to consider, honestly. You want to get on market initiates momentum. You're kind of jumping on momentum until it stalls. It's basically a theme, an idea that you trade, and you come out, and then you're done until the next theme or idea. And we'll cover some ideas and strategies in a moment. Multiple trades, very short holding time. It's not trading all day long with no edge. Honestly, I think that's the biggest thing. The best scalpers wait for the edge, are aggressive, trading around that edge, and then done. And then maybe the edge can come up for another couple of hours. Maybe you're just scalping the open, maybe just scalping the close, maybe you decide to just trade a certain time of day or a certain pattern. So it's the biggest enemy of a scalper is not the edge. I think the edge is quite good. It's diminishing that edge by trading some stuff that doesn't have edge and randomizing your kind of outcomes. And the trouble is then is activates that mindset of emotion and what we call the chimp, with the chimp paradox. Is like this little voice that's saying overtrade, risk, revenge trade, should I say, all these kind of stuff that we don't want to do. And that's the trouble with scalping. It can activate that. Okay. So an example might be this. We're back on the chart. Yes. There's a key level here, and I've just picked this up from the other day. Nothing really excessive or very good, but I'll show you some decent strategies in a moment. But an example, you might wait for that level to be breached, and then you might be trading multiple times around that level. So you might say, okay, I'm not getting involved. Let me go back to the chart. If I can scroll that up, perhaps I'm not getting involved in this sort of chop here. I don't know what's going on. Then as it approaches that level, it unlocks your kind of activity, and your activity might be like, okay, I'm going to fade that first example. This is examples, right? I'm going to fade that kind of first red. We're above that key level. First red, I'm in. Short. Right. Covering now on this little flush. I'm going to reverse back up. And I'm going to say, and I recognize I'm hindsighting this, but this is the type of thing you do as a scalper. Your focus, your energy, you're waiting, and you're so zoomed in on one thing. And then when that occurs, then you'll focus on the tape. We'll talk a little bit about kind of watching the price movements in a moment, but then you're really zoomed in. You're not wasting your energy on other nonsense. You're waiting for the level where there's a lot of participants. There's stops being triggered. There's people trying to fade the level. There's much more engagement around those key levels, whatever that may be for you. And that's where you're taking advantage, because scalper takes advantage of short-term price inefficiencies. That's worth remembering too, is that's our job. We are looking for those short-term movements and saying, that's gone a bit too far. That spring is stretched. Let me short it for a contraction back. We're not looking for a complete reversal. We're not looking for a move to fresh highs. We're looking for a short-term move. Hey, a lot of people, just like I talked about the story about you going in on Christmas Eve, buying a gift for your wife or significant other, and the clerk saying to you, oh, sir, you left this a bit late. Let me show you our finest items, because you're going to have to pay up because you've only got a few more hours until you get back and you've still got to pick up the turkey. So just like that, those are the people that are rushing around, and you're taking advantage of those people who are not price sensitive at all. They've been stopped. They're moving this and that and the other, and we're trying to take advantage of those price inefficiencies. So that's a sort of example of what you might do as a scalper, jobbing those orders under and over the key level, or aligning with one side only, right? And something I actually prefer to do is to say, right, I'm going to scalp only on the short side, so only short pops. or I'll only short when I feel like I'm going to get momentum back to a level. So in that example, I would only kind of, if I was aligning short only, take that first one, maybe take the second one, wouldn't be looking for the long. And you can do that. And I think that time makes it a little bit easier for the workload, a little bit easier for your mind to comprehend. Okay, so yeah, scalper might look to take 10 pips. I just kind of wanted to define what we're looking for, that sort of type of movements. But I think most people know, right? If you look at that, it's like we're looking for maybe 5 ticks, 5 pips, 10, 20, whatever the market kind of gives in a short period of time. And I think the important thing about this slide is that, to me, when you're scalping, the concept of risk reward changes a bit. And I know that's great on some people. They like to have a structured risk reward ratio, risking 1 to make 2, risking 1 to make 3. And if you can try and get more than that, great. Sometimes you get fantastic trades at 1 to 10. But you kind of, if you're looking to scalp, unless you're converting that scalp, which is something for another topic for another time, unless you're converting that scalp into a day trade or a swing trade, you're risking probably 1 to make 1, 1 to 1.5, 1 to 2 max, because that's the nature of the beast. You're looking for that short-term inefficiency, the spring stretch. I think it's too far, I'm going to short it. You're coming out when that's come back to the mean, or you think the momentum, you can come out when you think that spring is stretched maximum and it's probably going to contract. You're not sitting through pullbacks, you're not sitting through unwindings and consolidations and breakouts to new highs and backfills and fresh territory excursions, any of that stuff. You're literally looking for those short-term movements, however long they may be, whether they are 15 seconds, whether they're 5 minutes, whatever it is. So it's scaling out into the extremes. And unlike a day trader who might well sit through all this and drag a stop up and trail a stop and have a stop under the low, no, a scalper is trying to get out of the high of that candle, trying to get out of the low of the candle, trying to maximize your entry as much as possible. And we'll talk about sort of skills to do that. And actually next week, we'll talk a lot more about kind of some drills to improve your scalping techniques. So I'm going to cover some stuff today. What time? We're 20 past. I'm going to cover some stuff today, some strategies, etc. But next week, I'm going to go into drills of how to really get good at this game. Okay, but quick word on indicators. You can use indicators like your RSI, your rate of change to judge a move, but I prefer to read price. If you can just go back to reading naked price, then it's going to serve you better. I really, really believe that. Or if you are going to use indicators, you could just use them as a filter, right? So an example could be, hey, you know what? If the RSI is under 10 and I get an ignition bull bar, I'm going to go long. So you just say, I'm only trading longs, I'm only trading when the RSI is under 10. So as a filter rather than a signal. Traditionally, people use indicators and say, when this crosses that and that does that, get long. I think that, and this is a personal thing, I know lots of people who do very well from it. Not actually, it's not true. I don't know lots of people. I do know some people who do very well by using indicators. But I think that if you understand price and supply demand and the auction process and feel price, and the slide in a moment talk to you kind of a little bit about how to get that feel for price, I feel like that's a better way of doing it. That's just personal. I wouldn't don't ever use indicators, but that's just the way I like to look at things. Another example here might be if we go back to that kind of high that we'd highlighted and the level we're trading, you might say, and again, this is not something I'd want to do and I wouldn't suggest doing it, but as an example, someone might be like, hey, 15-second chart here, great. When the RSI starts to cross, I'm going to look to get short. When the RSI starts to cross back up, I'm going to look to get long, etc. So you could play that game. I don't think it's the right game to play. I think you can do better, but I wanted to show it and say, hey, I'm open-minded. Like, I know there's plenty of ways to trade this business. You just got to pick one. If you try and do everything, you get nowhere. If you try and do one thing well, then you can get somewhere. What's that saying? Who's that guy? Who's that Chinese proverb guy? I've forgotten his name. Someone's going to remind me after in the Q&A. There's some Q&A at the end, by the way. Man who chase 2 rabbits, catch none. Man who chase 1 rabbit, catch rabbit. There you go. Very, very, very apt. Very Marcus Aurelius of me. Okay, yeah, I think you get the idea. Let's go to time frame. So just one thing about time frames here. Just use your usual time frame to identify areas to do business. So we were talking about, hey, where do I get involved? Because you're like, okay, I hear you, Mark. He's talking about getting involved in a certain area, but where the hell do I get involved, right? Where? This is where you probably know how to analyze a daily chart, 15-minute chart, 5-minute chart, whatever it is. Whatever instrument you're trading, the prior high, prior low, key levels. If you're trading an index, the prior close. If you're trading a regular trading hour session, if you're trading a currency, you know these things, right? And so you go down the time frame to time the entry. So a scalper looks at those levels, hypothesizes what could happen at the levels, or hey, I at least think there's going to be some activity there, and then gets involved at those levels. One sort of alert, if you like, be careful to not be seduced by market moves. We're all traders. We all see something. We see a price spike. We just don't want to get sucked into something just happening in the middle of nowhere, because that's what will undo your good work. And especially as a scalper, you know, maybe as a day trader and swing trader, you can get away with this because you have a risk order ratio. Let's say you're operating on a 2-to-1 average. You get one wrong, fine, it's not the end of the world. But if you're operating down in the 1-to-1s or 1.5-to-1s, you get a trade wrong, it kind of takes away the good from the other trade, especially when adding spreads into the account. So get your chart up, identify your areas to do business, identify your areas you want to scalp around, and then when it's time to rock and roll, price is the way to go, in my humble opinion. And I'll go to that in a moment, but actually I think that slide probably should have gone there. But let's go to the mindset, because I think I probably wanted to make sure that we're all thinking about the same thing before we talk about the tape and the price changes and stuff. So it should be disciplined. I think it goes without saying this, but I had to put it in here. If you don't close a trade when you said you were going to, you will just be another body on the road of scalpers trying to get there. It's such a common problem. And if it's a problem for you, don't give up. If you like price goes against you, you freeze, deer in headlights, just practice. Small size. The reason you're doing it is because you haven't had enough reps. Just keep doing the reps, keep doing the reps. And then you get to a point where, hey, it's at my point I want to get out. I'm done. You don't want to be holding a scalp saying, well, actually, you know, I quite like this because, you know, it's got a long-term uptrend. You start looking at monthly charts or something stupid. It's, I don't know. You're there for a reason. Didn't work out. Next. That's the way to play it. And one thing about risk is you can use a stop, but I think that the better way, and in personal opinion, you do what you want to do with risk. It's your money, but have an emergency stop and then come out manually. Because very often I think by the time you fiddle around putting stops in, as you're scalping, you're trying to do this, you're trying to do that. It's a very, very difficult thing to do, you know, and sometimes you might want a little bit wider. One tick is all the difference. I think, yeah, again, this is a personal opinion and all these stuff is, but I feel like if you take a trade, you should just come out quickly if it's not going your way. Have an emergency stop that you can put in automatically on your order, especially if you're trading through TradingView. You can use an emergency wide stop. So if something goes wrong, then you know the worst case scenario is whatever it's going to be, and you can cancel it after exiting. So at least your trade is covered if the intent goes down or whatever it may be. But I think you could probably just be quick with coming out with your trade rather than using a fixed stop. Okay, so there's what I was looking for. So scalping strategies, we're on good time. 2 strategies with the biggest edge, I believe, momentum and exhaustion. So momentum, we're looking to spot an aggressive buyer or a seller and jump on board that momentum until it stops. Sounds obvious, but it makes sense, right? Just like someone who is super time sensitive, but not price sensitive, and they're a big order, they don't care if they're hitting offer and moving the price. They've got an order to do, and they've got an order to do quickly. Like, you've got a present to buy on Christmas Eve and you've got a present to buy quickly. If you're shown an item and it happens to be a little bit more than you want to spend, you ain't got time to mess around looking for something under your budget. You're like, I'll take it. So the same type of thing, momentum, that's caused by people who are just have to get in at whatever cost. I'm not saying necessarily it's massive panic, but there is, if people are lifting offers, they don't want to wait to be filled. They could sit on the bid all day long and wait to be filled. They could sit under the bid and wait to be filled. But if they're hitting offers, it means that they are the aggressor, and that's going to move price. And if we believe that momentum is going to continue, we take advantage of that. We don't care why they're doing it. We don't care where it's going to go. We just want it to continue, ride that momentum, hop on, hop off when it stalls. Done. That's all we're doing as scalpers. Not trying to be clever, not trying to be smart. And in fact, some of the best scalpers I know are guys who don't think about what they're doing. They're like, market's moving quick, I'm jumping on, and as soon as it stops moving, I'm off. And that's it. They're not trying to second guess things. And the most important thing is they're off quick, whether it goes against them or it goes for them. And exhaustion, which, you know, we'll cover some in a bit, is waiting for that final flurry of price and volume before you kind of take that snap back. So momentum, final flurry, and then seeing that spring really stretched to stall, and then waiting for it to come back to the kind of mean, and you're taking advantage of that. More on that next week, but let's push on with momentum for this week. Okay, this is a good slide. If you've got drifted off and you're looking at price and you kind of look at the markets and stuff, might be worth watching this one. This might be the takeaway that you want. So pace of the tape. So tape isn't watching depth of market, time and sales, confusion of that, and it can be fine. But tape is just like Jesse Livermore was doing. He wasn't looking at depth of market. He wasn't looking at time and sales. It's price change. It's the price moving. It's how the price moves. And the more you can kind of feel that, and it's just something that we'll talk about drills again. There's next week we'll go into these drills. The more you can feel the change in price, and you can read it on a chart as well, you can kind of see that visually. But the more you see the price changing and the speed of it and the pace of it, the pace of the tape, the more you can feel as a scalper where to get in, where to get out, how to finesse that trade, whether it's just a pause, a pullback, you can kind of feel a lot more. So just like the old time when they're kind of through the ticker tape and they're watching the price coming through, if you're seeing like 10, 11, 12, 13, 14, 15, 16, 17, 17, 17, 16, 17, 18, 19, wow, that's momentum, right? Bid, pushing up versus, sitting at 10, 10, 11, 10, 10, 11, 12, 13, 13, 14, 14, 13, 14. Yes, it's going up, but there's less momentum there. So if you're watching NASDAQ or you're watching Dow and you're watching it going from, what's it printing now? 34,820, 21, 20, 21, 21, 23, 23, 23, 24, 25, 23. There's no momentum, right? It's just sitting there doing nothing. A little bit, but not much. Whereas if it's like 27, 29s, 32, it's poof, 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 moving quick. That's momentum. And so this is why scalping is, you've got to be kind of really fine-tuned when you're doing this, because it's intense. You're looking at price. Now, not to say you don't look at the chart will still be there. Maybe use a 15-second, maybe use a 1 minute, whatever you want to do. But on that hard right of the chart, you're watching that price move. You're watching how it moves, the kind of speed of it, the pace of the tape. And so, something to be quite adept with, and yes, a lot of people say, oh, you've got to read the depth of market and time of sales. I'll be honest with you, I feel that edge has disappeared over time. There's probably still people doing it. That used to be a big edge for me, time and sales, depth of market. I don't think now, with the speed of the markets, the volatility, the amount of algos there, there's this, it's probably 90% or 95% you can get from just by watching price and understanding price. So if you're not down that rabbit hole, I wouldn't go down it. If you want to go down that rabbit hole, fine. You can still go down it, watch these kind of futures contracts, and then trade your spread bet or your CFD product just by watching the movement of the futures. So it's important to really grasp this pace of the tape concept. It's not an easy thing to kind of explain, and it looks a bit like, ooh, what's it mean? But I think we start to watch price around those key levels. Okay, I'm going to go through some drills later on. Not later on. In the next webinar, second part of this webinar series, how to get better at that, how you can read that pace of the tape, how you can read the exhaustion, how you can read that momentum, because that's really the key to kind of get pinpointing the best options. So example here might be, you got a 15-second chart, you see momentum, it pauses, picks back up again. You're only looking to get, I don't know why I'm pointing at the screen, you can't see what I'm pointing at. You're only looking to get those chunks, right? You're not looking to get that full move like a day trader might be. You're looking to get those little chunks. You're looking to see the price movement, momentum, pause, and then what's an indication momentum is going to kick back in again? That's where the scalper might want to get involved. You're not interested in predicting. You're not interested. If you look at that first kind of red rectangle, while it's sitting there doing nothing, you're not interested. Yeah, but if it starts moving again aggressively, you're jumping on. You're coming off when it stops. If that reverses straight away, you're off. If it doesn't go your way, great. Now, there's more to it than just it reverses like one tick, of course, because it's never just going to go to one straight line. It's nice if it does. It's a very easy trade to do, but it's your judgment of, hey, pausing, coming up, down a bit. Oh, how does it react? That's the key. Okay, so some momentum rules for you. Again, these are my rules. Adapt them, adjust them. I wouldn't change them too much. I think they're good, but you can choose to use these as you see fit. A good prime momentum, right? And this is important because I think it's very difficult. Maybe there's some other traders out there who can do this, but for me, just spotting momentum out of nowhere, I don't have a crystal ball. I don't know when momentum's going to start. Suddenly just kicks in and spikes on a 1 minute chart. I don't know where that's coming from. Like, especially if it's been sitting there doing nothing. Now, of course, if it's been exhaustion beforehand, I might kind of have an idea on it, but if it's just sitting there doing nothing and it suddenly spikes, I got no idea it's going to do that. And I'm okay with that because that's not what I'm trying to get. I'm trying to get the second move. So the good prior momentum, whatever time frame that is, a good time of day for momentum. So I added this because, you know, if you're in the middle of the day, as in US time, so you're coming into noon US time, or maybe it's that sort of choppy period where it's, I'm trying to think in Eastern time, but let me work in GMT. So kind of 7 o'clock, 7:30, maybe it's just not a lot going on. Volume's low, it's chopping around. Not going to be much momentum. Open, momentum. Closing drive, momentum. Great. Price spike in one direction, pause, pull back, and then the first signs of momentum again. So we're not looking to get the first move because I haven't got a clue when that first move's happening. I'm looking to see the first move, momentum, right time of day. Yep. Decent spike. Yep. Now we're pausing. Now you're just waiting. You're on the buy. You're on the buy. As soon as you see that momentum, we go back to that pace of the tape again, running quickly, taking offers, then just scalp. And you're in the direction of the move, and you're out straight away if it doesn't initiate that momentum ignition for the second leg, or if it stalls after you've had a run. And it's not a case of, oh, I wish I had a little bit more, I need a few more pips. That's not the game you're playing as a scalper. The game you're playing as a scalper is riding the momentum. And one thing you get good at is as you get more experience as a scalper, you're like, hey, that's very, very short-term momentum. Fine. Now, do I want to sit through a little bit of congestion, like 5, 10, 15 seconds of congestion, because I think we've got a bigger leg coming, or do I want to come out and just take that? You might find it's not enough in some markets. You might find, hey, I'm quite good at reading that initial pulse, that ignition, or the secondary ignition, but there's not enough meat on the bone for me. It's, it's not enough movement after I've paid for my spread, even the very, very tight spreads. It's not enough. So you might have to kind of set a little bit for a kind of another sort of 2.5 legs, if you like. So you're trading in the direction of the move after you spotted that momentum. Okay, so let me show you the big red button trade. So the big red button trade, how long we've got? So we do 15 minutes. Hopefully we'll cover this, and I've got some time for Q&A at the end. If you've got any questions, you can stick them in the question section. Big red button. Nice trade this. Haven't really been getting it recently because the market's been pretty aggressive bid, but that's fine. You're never going to do these setups every day. That's cool. You sit them there, you put them in your file, you write them down the rules, you dust them off. Market's getting hammered today. Let me pull out the big red button. Market starts to move hard to prior lows, gathering momentum. Pace of the tape strong. Imagine you've got that, you've got a prior low, you level in. Pace of the tape, hitting bids. It's good. Comes to that prior low, pauses. A little calm. Friday's within sight. It's like a magnet sucking price in. Whoa, sucking price in. And just like the momentum sort of example we gave last slide, this is with the idea that actually our objective with the scalp is to hold for a liquidity hunt under the lows. So big red button, the reason I call it a big red button is you are just pressing the button, sell button. That's it. You're not trying to finesse this thing, anything. You've seen price rip down to lows. You've seen it pause. You know the lows are there. You know that sucker's a magnet for price. And you also know there's a lot of people who have stops under that low. So the objective of this trade is to hunt for those stops under that low. Is to not be the guy who has his stops under that low, but to cover into those people's stops. So market's hammering lower, pauses, small pop. As soon as you get the momentum back in the direction of the trade or the trend, going back to the pace of the tape starts to pick up again, bang, big red button, you're in, you're not being smart about it, and you're holding for the liquidity hunt under the lows. When it goes under those lows, you are covering, you're out. Now, I will say this, recently, the last sort of year or so, those lows have been quick. Sucks a lot of liquidity, jumps back. 5-10 years ago, you get a much deeper spike. And I'm not saying it won't go back to that, but you've got to be quick with this. But that's the thesis. The thesis is there's a bunch of people with sell stops under there, and they are out at any cost. They are the guy walking into the department store. How many times am I going to use that analogy? They're the guy walking into the department store having to do that at any price. They are stop loss on the lows, and we're taking advantage of that, the counterparty. Some ways to kind of add some juice to this trade is if we've got a full scale reversal, and maybe if we're near the close. I do like that. We haven't had those for a while. I do like that. Panic selling day is coming up. The bell is about to happen, as in there's people are shifting stocks. The indexes are moving based on the stock movement. The bell's going to go. They can't do any more business apart from very illiquid illiquid aftermarket hours stuff, there's a time constraint. Going into the department store with 15 minutes to go before they close. Last time I used that analogy, you want to take advantage of that. You want to take advantage of that. So that's a good one. Big red button. Again, do your own kind of research on it. Idea is one here: gold prior lows coming down. Pause at 46s. Sits there. There's a reasonable momentum. It's not the best, but it's a recent example. I'm not going to go back and cherry pick one from 1998 or something stupid. Pretty recent example. Comes here, holds at 46s, hold at 46 bid, 46 bid, bang, and now it's printing 45s, 3/4, halves, 5s, 4s, and that's when you want to initiate. You're in. You see that flurry as it breaks through down to 43, 48. And as soon as it starts to snap back, you're out, because you can see how quickly it snaps back. And this is a scalp trade. You can see, God, you don't want to be hanging around on this. You hang around, you dilly and you dither. You're just not gonna pay you number one, and you're gonna get caught, and it's just gonna do whatever it wants after that, because the objective is done. It's through the low. Great if you get a lovely flush and just boom, starts taking out reams of bid, and it's kind of dollars and dollars low. You're like, thank you very much, I'll take that. And sometimes it might just kiss through. Not many stops there. You take what it gives you. The objective is that. The objective is to front run the thesis that very often that's a magnet. There's going to be stops under that level. Works for a lot of markets. Look at it a little bit more. Okay, so similar but not big red button is the concept of the breakout front run. So I think there's a really good, and you know why I like this so much, right? I like this one so much is because you don't have to be so fixated on the screen all the time. So as a scalper, you can say, hey, my thesis is that actually when breakouts occur, price moves very quickly in one direction, and it either stops and reverses or it carries on. I don't care about that bit. I care about the 15 seconds, 30 seconds, 1 minute of movement that occurs very often after a key level gets broken, because and I know the whole world and his dog has stops above and below key levels. They're taught to do it from day one, from textbook trading 101. Put your stop under a low, and in some circumstances, that's fine. But it's a scalper. Let's take advantage of that. Someone's going to get, how many times you've been slipped? How many times you put a stop on at 49, sell stop, and you end up getting filled at 46? Oh, I've been slipped. That's because everyone's trying to get out. Now, as a scalper, you're using that to your advantage. You're saying, hey, I'm short as it comes through 49s. I'm buying back my short. And by the time you're in, you're the one buying at 46. You're the one covering that guy's stop for him, which is fine because your job was just that. Anyway, so we're anticipating a breakout. That's the thesis. Spot momentum. Join the momentum, cover or close into stops as the breakout flushes. Let's look at an example. Here's gold again. Have we got another example of gold? Thought I did, yeah. Prior high, market's running up to prior high. Market consolidates 52s, 52.5s, 53s. You know that prior high's there. You know the stops there. You know what's going on. So you wait. Momentum's on your side. Momentum starts to roll again. You're in the trade. Your objective is to take it through that highs and come out as soon as momentum stalls. If it doesn't go and reverses before it touches the high, you're still out anyway. And you're taking advantage of that small little spike. It's not much. Like this one's $1, right? It's nothing. It's nothing. So as I say, sometimes you might be like, okay, do I kind of use this as a leg to kind of help me get in a bigger trade? Do I kind of extend this a bit, or do I just try and get good at doing this, but on kind of bigger, more important levels? Dow. This is if we go back very quickly to this slide here, the big red button, bottom bullet, penultimate bullet, perhaps a change of trend to catch people out. This is the example here. Dow, you've had data at 6 p.m. You've had it kind of oscillating around, upside, downside, bit of a data dance, I call it, and then bang, reversal to the upside. The prior high there, printing, what's that, 33,219. There's your kind of trade idea. I'm a scalper. If it gets momentum and heads towards that high, but pauses just before that high, that's when you can be in and you can look for those stops to flush. Now, if you want to hold it and carry on, fine. But the objective is to take advantage of that short-term price inefficiency. That's what you're doing as a scalper. Okay, so something to consider is watching how price prints. How does it respond to the highs and lows? Do we get a bid just coming? Does price just stall or sit there? There's always little clues that can help you. And I don't want to confuse you and say, oh, this is always going to happen. It's always this. That's why we've got to be good at coming out. But the better we can get at really reading price and understanding little nuances and little subtleties and little things, it's going to help us. So it's quite a busy chart, this, but 15-second chart of gold. Okay. And the reason I use gold is that I don't trade gold very much. And it's nice to do stuff that I haven't already either traded or haven't got some sort of bias on, or taken a trade that's different to like a longer term day trade or something. So it's nice because it's kind of showing you really good example. So, okay, market's heading lower, right? We're heading lower into 630. Is it the flush? We don't know at the time, right? We're not hindsight traders at the time. No idea whatsoever, right? So we start to think, could it be the flush? Okay. Let's see what the price response is. Obviously, if it goes lower and lower and lower, well, that's not the flush. Okay, we're waiting. We're there. Maybe we've got a ticket loaded up. Price starts to pop. Okay, response is good. Let's see. Straight back down again. Sellers are still sniffing around. That's that third box on the bottom there. You can see that. Not interested yet. Let's see what happens. Okay, we break through highs. That's good. No rip. Sellers are still there. So every time we pop up, sellers are there. That's changed sentiment a bit from this kind of one-way street we had for 10 minutes to the downside, hasn't it? But it's not really super aggressive. Pops out again to new highs, but then sellers still pinning it. Now when we pop to new highs, supply demand's really shifted. Sellers aren't pinning it. That might be your opportunity to jump on the momentum, especially that pause and then the second leg. I always like to be the second leg expert. I don't care about the first. But that might be this kind of trade here, this sort of last sort of dollar and a bit. It might be it. That might be the way you trade it. Or you might trade on the break. The point here is to really read these subtleties, because most of the traders are looking at this and not seeing what the price is telling you. The fact that it's gone to new highs and held, that's giving us an kind of indication of what's truly happening under the bonnet. This new high here, that's brought down quite quick. Not quite quick, sorry, quite deep. This one here, not much, and much more time in between. That tells you that there's some buyers now, some buyers sniffing around. There's still sellers, not a one-way street by any means, and it's not ripping off into the stratosphere. But look at the difference, sitting there, just not quite, then pushing lows. And here, now it's taking a long time, and then it sort of springboard down here, bang, it's back up. It's reading those little clues that I think are so important. Okay. So we've got time for some Q&A, but next week, I'll talk about exhaustion plays and mean reversion plays with scalping. So pre-news scalp, all markets, the same story with that. The algo party scalp, it's a risky one, this, and you've got to be very, very careful. But I think when there's a liquidity vacuum and everyone's running for the same door, there's opportunity. But there's a bit of open-ended risk, which we'll talk about. Announcement trading. So really, this is a really kind of strict rule-based scalp. So, it's around an announcement, and it's using very, very defined rules. If the announcement reverses, when to get in, where the stop is, where the target is. So it's kind of a little bit simpler to execute. People go, oh, it's high risk. It's around the announcement trading. Yeah, whatever. The announcement's already out. Yes, it's moving hard and fast, but as long as you can execute quickly and you can put a stop in, and this one does have a predefined stop that's calculated for you based on the movement, then you're okay. Now, trading during the announcement is where things get a little bit tricky, because it's after the announcement. Okay, then the closing dance trade, a trade for the close, and this is a mean reversion type trade that happens more often than not, actually, but often there's not enough meat in it to take it. So that's really the kind of downside of that one. And then some scalper training drills. So get good at reading pace of the tape. I missed off of the tape on there, but get good at reading tape pace, because that help your loads, especially when you kind of see that secondary momentum. You've seen the primary, you've seen it stall, and then you kind of see it start to push on. The sooner you can get on board that, the quicker. And also for getting out, it's just so good. We can say, that thing's stalled, I'm out, done. And maybe it's a great profit on it, maybe it's a scratch. That doesn't matter. It's like the objective is the objective, which is to try and take advantage of those short-term market inefficiencies. Okay. I am going to take some questions. If you have any, ladies and gents, you can put your questions in the questions section. Does level 2 as a must, broker or platform for? Adrian, no. You know, I don't think you need it anymore. Listen, there's some guys out there who are still trading level 2. Fine, they've been doing it for many years, and I did it for many years. I don't feel there's an edge there, as much an edge there anymore. I feel that you can still, in fact, I feel that you do not still. I feel like you can take advantage of price movements and you know, decent inefficiencies on a short-term basis, without having to go down to level 2, without having to look at market depth. I feel like for many traders, the issue isn't really trying to get another edge or trying to have another tool to help them get the edge. It's a strategy, defined strategy or strategies, and discipline, right? And mindset, those type of things, and risks. You've got a triangle of risk, strategy, mindset. And, you know, adding another tool feels like it's going to help, but in actual fact, it doesn't really help. There's plenty of opportunity out there without having to kind of go down that level 2 route. That's my opinion on it. You know, there's some people who disagree, and their edges come from that, you know, for a long period of time. All right, let me look what else we've got here. Adrian. Are you a scalper? Any courses on it soon? Yeah, Adrian, you know what? I do scalp now and then. Honestly, I love scalping. I think there's a big edge there. I won't sit there all day long, every day, 5 days a week scalping. But when there's an opportunity and I feel like, hey, is there a broader theme here? Is there a broader play? And I go, nah, you know what? I can't see a broader play, but I can see a short-term edge. Example might be, you know, let's say there's short-term exhaustion, right? The market's ramping lower. I don't really want to get long, right? I think it's probably going to close at lows, and I probably would trade the big red button play towards the end of the day, so maybe scalping, but I'd kind of hold to the close. But if I saw like a very long bar, you know, right across 6 p.m. UK time, decent big range after a big momentum trade, it just pauses, then for me that might be a scalp pop back up, and we'll cover that next 2 weeks time. I would scalp that. I'm not looking for a kind of rotation back to VWAP. I'm definitely looking for a full reversal. And I know that the wind is not on my side, but I also know that that spring is really stretched, and I can see it. I see it pause. I know the risk is pretty capped. If it carries on, I'm just going to dump it. But if it pops back up, I might get a really decent pop. So that's how I tend to approach it. I don't come into the day going, I'm going to scalp, I'm going to scalp, I'm going to scalp. I come to the day going, hey, I've got some strategies that I can deploy. I'd rather look for a bigger move. But sometimes I don't also, honestly, and sometimes I don't want to be seeing through pullbacks and rotations. I want to get a move from here to here and be out and say, thanks very much. Well, that will do me very nicely for the day. I'm not interested in sitting. Then sometimes I'm like, okay, I really do think we're going to close at lows or close at highs. I'm prepared to sit through it. I'm prepared to sit through ups and downs and lefts and rights and unrealized going against you. And that's fine, because that's my thesis. But, you know, sometimes there's opportunity to take a little bit, and that's fine by me. Mark, do you have a specific list of any courses on it soon? No, Adrian, not. No, you know what? I might do a module. I'm doing a module right now for the price action program, which we're recording and will be uploaded. And if you're on that, you'll get that in the dashboard. But I might add some more extra color to that with scalping stuff at some point. But at the moment, no. But that's a good suggestion. Thank you. Robert said, well, that's got off that. Robert said, Mark, do you have a specific list of markets that will help? Sorry, that you will scalp based on spread and liquidity, i.e. those markets with the most favorable spreads and lowest chance of excessive slippage. You know what, Robert, it's going to be just the big boys. You know those DAX, Dow, NASDAQ. I don't know about some of the currency pairs. I don't feel the range is that big on some of them. A good way of doing it, actually, Robert, is to say, right, what's the average daily range of the market, and what's the spread, and then the ratio between the two. So if you've got an average daily range of 300 points and the spread is 1, great. And you've got an average daily range of another instrument that's 100 points and the spread is 1, not so great. So that tends to be kind of a good rule of thumb. Daily range sort of movement you're going to get, expected movement in ticks. How's the spread compared to that? That's normally a good way of kind of fine tuning stuff. And then sometimes, I mean, at the moment, like I know you trade, DAX, NASDAQ, this was no DAX specifically, but the spreads are nothing compared to some of the moves we're getting. Massive moves. So it opens up an opportunity to trade some stuff. But it's a good point, because if you start scalping things that, let's say the move isn't that much and the spread is a lot, you're going to get hammered in spreads. And even tight spreads. Pepperstone got some great spreads on a lot of their instruments, even them, if you're trying to scalp too much, it's going to be expensive for you. Mark's recognize you, Mark. He has asked, can you scalp a 15-minute chart? I guess you could, and you'd want to be looking at price change more than anything. But I would rather look at the bigger picture on the 15-minute and then go down to my time frame to watch the little nuances. So theoretically you could, but I wouldn't be looking at the charts per se. I'd probably be looking at the price movement and then kind of thinking in my mind, because a 15-minute chart, it's a lot of data in that. If you're scalping, I kind of think the price has gone up, it's pulled back, it's gone up. I wouldn't be able to necessarily see that on the candle, so I'd have to kind of memorize it a little bit right before the point I pulled the trigger on the trade. So no, I think is my answer to that, but I think that you could definitely use it as a kind of idea generator. That's the level I want to get involved in. That's the breakout level that might be interesting. Hey, if we pop through that, it's going to be a damn load of stops on that. So let's use that kind of breakout precursor. Let's get before the breakout. Let's see if we can get involved in that, because I know there's a lot of stops there. So that's sort of the way that I like to do that, the higher time frame analysis. Jacob's put, great content as always. Thank you, Mark. My worst fear is the strat stop working. This balancing act between long-term view and worrying it could stop every day, being relaxed and process focused, but at the same time being prepared to witness it failing. It took me long to find a half decent edge. I feel it'll take me just as long to find another one. Any advice for developing trader? I love this question. Let me just do this a second. Sorry, gentlemen and ladies. Good. Okay. Strategies do come and go. And one thing you should do, Jacob, and one thing I do, and it's not like something you really think, oh, I must do this, but especially when a strategy is working, you should always be looking for something else. I can tell you a story. 10 years ago, maybe 12, and probably 10, I had a really good strategy trading the Dow. Really good, man. It was so good. I felt like everything was fitting into place. I was starting to trade more SAR. It was just really nice, comfortable place to be. And all of a sudden, it stopped working. And I was like, okay, well, what do I do now? Do I just wait? Do I try another market? Do I try another strategy? What do I do? And honestly, I felt awful. I was like, I felt like I'd cracked this game. And you never do, and I was humble enough to know that, hey, this isn't. But it's the first time I felt that, what I'd learned and the methodology that I'd built and crafted suddenly stopped working. And I thought, is that it? Is that the run done? Was I just lucky? And I learned from that and actually adapted and went to trade slightly different things and moving the strategies over and the mindset over and all the stuff that you've learned into this new ideas. But the kind of moral of the story is to always have your eye on something else. And that's a really good question, is that if something's working great, you milk that thing as much as you can. While it's there, you just trade and trade and trade and trade it. But also have one eye on, that's why marking up your charts at the end of the day is good, because you're marking up your charts and you're saying, hey, what do I see after the market's closed that I don't see in real time? And doing that allows you to kind of spot things and go, oh, hey, that's interesting. Sometimes there's an ignition bar in there that actually might be quite useful. Sometimes there's this that's quite, and you start to think a little bit more. So yeah, have some sort of process for learning new strategies, looking at new strategies, and something like this, coming onto a webinar like this and going, hey, I'm open-minded to stuff. I'm going to go and explore that strategy. And you might be like, hey, it's not for me. Let's see what other one is, and get ideas and start to develop different strategies. And then you can run them in parallel. And then if the worst comes to worst and the strategy you're deploying becomes ineffective, you can go and you have to reinvent yourself. Because it's quite scary in a way when you're doing so well out of one strategy and just stops. And so as an experienced trader, I think it's, if you can, try to kind of build up a strategy in parallel that you may well deploy at the same time, or you may well trade small, but hey, I've got a few ways of trading this, man. So if the worst comes to worst, that doesn't work, I still have something to do. Okay, so let me run through quick how long we've got. 5 minutes. Thanks for your questions, guys. I like these questions. This session rocks. Great content. Thank you, Adrian. Appreciate that. Barry says, what sort of RVR are you looking for in a scalp trade? Also, you normally are an advocate of trading less. This would be an additional tool to add to your toolbox or something to focus instead of visual personality. Yes. Yeah, Barry, you're right. I do believe in trading less. And I think that, as I mentioned at the beginning, the scalp, we shouldn't confuse scalping with trading loads. It's trading, short term, and maybe you trade 4 or 5 times around a level, but it's not pumping away at the bloody button all day long. And so I think that it's a useful tool to have in your arsenal. I think there's times when you don't have a broader idea, you don't have a broader thesis, but you kind of see short-term momentum. I think today was a good example. I didn't actually take it today. I was hovering over that buy button this morning. I was like, I can see that momentum. We dipped down at the open, started to see it push back up. Man, big gap, and everything indicated a drive higher, right? Good scalp trade there. But I was just, you know what? I don't really have a target for this. This could reverse. Let me just wait till later in the day. There's going to be something on later in the day, maybe in the afternoon, evening. However, if you were happy with scalping, I'm not saying I'm not happy with scalping, I just decided not to today, you could just look at it objectively and go, hey, I don't know where it's going, but I'm just going to jump on momentum and jump off quickly and trade that sort of game. And so it can be another string to your bow, or as you say, you could say, hey, it fits my personality better. I want to kind of just be a scalper. But, I do kind of press this point. It's still only focusing on places where you have edge, opportunities you have edge, open, key levels, maybe the close, and then being a specialist there rather than going, I'm going to scalp all day long. Maybe you scalp if it comes back to the VWAP. But I think that's important to distinguish, because I don't know anybody who does okay from scalping who sits there all day long and will scalp. Number one, you run out of focus, you run out of energy. And number two, you're trading with no edge. You're just trading with no edge. Listen, I'm not saying, so maybe there is somebody out there. I never say, gosh, I'm fully aware of people who are trading very, very differently to me who are doing very, very well. So I'll never tell you not to do something. But in my experience and what I observe, scalping's best done around those key levels and those points where there's a specific edge. Okay. Got a couple of minutes to run through these quickly. Jennifer, would I be able to show level 2 works? Maybe I will someday, Jennifer. Yeah, we'll go through some depths of market stuff. Karim says, if scalping is such a short move, does it mean we use a bigger lot size? You can do, Karim. You can do, and get your craft kind of, crafted. Get your skill crafted and adapted and adjusted and dialed in first before you start increasing your size. But yes, because your risk is much less, you're risking a smaller amount, you're trying to make more. Generally, and I'm careful when I'm talking about risk and sizing, but generally you're probably trading more size because your stop's going to be smaller, your profit target's going to be smaller. You're probably not going to be looking to take, a couple of quid out of the market. You wouldn't do if you're a day trade. So you've just got to kind of reverse engineer how much you're going to risk on the day and then go from there. It can be, just scalping. You can have really big runs with scalping. I think that's why it's so seductive to traders, is that if you get it right in the right place, right time, you can do very, very well. It's just making sure, and I know I'm pressing this point, I sound boring, but it's make sure you pump those brakes when things aren't working, because otherwise it's like this, equities up and down, up and down, up and down. It's horrible for anyone, that. Bartor said, very interesting, the mentality between scalping for quick 10 points and the mentality for scalping for 100 points. Yes, Sartor, I know you like to hold your trades a little bit longer too. Yorit said, thanks, Mark. Scalping a retest and break and the level breaks is basically the opposite of flushing the stops, but I often play that. Good. And the Chinese is Confucius. Is it Confucius? Have I pronounced that right? God, man. I know the Stoics, Marcus Aurelius, Epictetus, but yeah, thank you for that. Okay, Helena's put great session. Thank you. What market conditions activate your scalping strategy? I think when I don't have a bigger thesis and I kind of look at the day and I go, I don't have an idea. We're going to close the VWAP, going to close the highs, going to test this, but I see some short-term momentum. I see an ignition bar. I'm going to jump on it. I'm going to jump off when I go. I try not to get too sucked into that, because I don't want to kind of default back to my decade-old pathway of sitting there scalping away. But it's a skill set I have, and it's silly not to use it. But I prefer to use it as a leg into a bigger trade, if that makes sense. So I see the momentum. I've maybe got a bigger idea as well. jump on the scalp, convert it into a day trade. Losing my voice here. We're evolving into algos with the scalping. Yeah, that's the other thing, actually. You got to be careful you're not trying to compete with algos. Is it best to scalp? William says, last question, is it best to scalp at the same times each day? You can do, William, and actually, scalping at the open is a good time, but sometimes you don't know when a level is going to be tested, so it's very difficult to time that. But yeah, if you only have a limited amount of time, okay, I'm gonna watch the open. I'm gonna trade for the first 30 minutes, maybe let the first 5 minutes play out, and then you start looking and observing and say, yeah, is there a scalping opportunity? But again, reiterating, just be careful you're not getting involved when they don't believe there's edge. It's fine to sit on your hands and just watch things go. It's fine to take one trade, one small 10-point trade in one day. People are, that's not scalping. It is. And the person who takes 5 trades in a week and loses 2, makes 3, you're up. You're going to make money. And over time, you can develop that. It's much better than digging a big hole for yourself. All right, ladies and gents, thank you so much. Been a pleasure as always. I shall see you 2 weeks time. So 6 o'clock Tuesday, not next Tuesday, the week after. And we'll go through some more scalping concepts. Hope you enjoyed this one. Thank you for your feedback, guys, and your questions. Take care. Keep the risk managed. See you soon. Bye-bye.